Welcome back, FUD Nation. I hope you guys have been enjoying the recent content. Big shout outs to my lovely girlfriend for the last video. Hope you guys enjoyed that. And I have to say a huge thank you to everybody who's gotten this channel to 20,000 subscribers. 20,000. Oh my gosh, that is absolutely amazing. I don't know what to say, guys. I'm so blown away. Thank you so much. If you're liking, commenting, subscribing, following along, hating, disliking, whatever it is, you're part of the whole story here, and I thank you guys for participating seriously from the bottom of my heart. We're here in a bear market, but we're making it work for us. We're keeping the energy, keeping the vibe. That is what it is all about, continuing to learn, and that's what today's episode is all about. As we bring back one of my favorite personalities in the crypto space, what I consider to be a true master, a true expert at technical analysis and actually putting in those trades, the one and only Krown himself. We talk a lot. It's a pretty long episode. We talk a lot. We do a huge technical analysis section of this episode, and then we talk about a topic for the day. We're going to start bringing Krown back on the regular and discussing not only sort of updates on TA, but also topics so that we can delve in and start to understand more about the fundamentals of the market itself. Today's topic is about market making, and so I'm going to put some timestamps in the description so you could check out the TA segment, or you could also skip ahead and check out the market making segment where we talk about what market making is, how it works, who these people are, and just helping you understand more about how these markets, these cryptocurrency markets work. I really wanted to get this video up as fast as I could. I talked to Krown just a few minutes ago, and the reason is that I think, if I'm right, some of my sources have told me that the Bitcoin ETF submitted by SolidX and VanEck has been withdrawn, which might actually impact some of, the following segment on TA, but just know that essentially Krown has been calling for a shift downward. Regardless, I wanted to get this video out as fast as possible so that you guys can benefit from it before the potential big movement in the market. Alrighty, welcome back once again to FUD TV, FUD Nation. Give it up. Give a warm welcome, please, to the one and only Krown from Krown's Crypto Cave with the baddest TA in the game. How you doing, Krown? Thank you once again for coming on the show.
Hey, what's up, Elliot? Thanks again for having me on. Pleasure to be here with FUD Nation. My God, I just want to begin by saying all of the comments in that past Tone Bays video, thank you. I just want to say a massive thank you to all the people out there. Holy moly, man. It was such supportive, and it's like you just wish you could go and like look that person in the eyes and just say thank you and shake their hand. That was so nice. And yeah, man.
Yeah, and I don't want this to be a rehashing of the tone thing. I honestly, I said everything I have to say. That I don't want to throw any more
Gotcha.
negativity at tone. I didn't anticipate any of that stuff to happen. I really didn't, and we can just leave it in the past now. I think the community hath spoken, and we can move right along. But yeah, obviously I care a lot about providing good information, whether or not it's positive information, quote unquote, or moon boyish information. Obviously I think the overall trend on my channel has been extremely bearish, whether it's the Bloomberg analyst, who I actually spoke with again yesterday. I'll be putting up that conversation soon. Krown segments, tone, obviously. I mean, it's all been extremely bearish. And so I appreciate this being, the excitement being around, information, even if it's hard to digest. So thank you guys. And once again, we have Krown back here. FUD Nation, give it up. Let's dive right in, Krown. What's going on with Big Daddy Bitcoin?
All right, let's go straight into the charts, I suppose. Well, let me just put on my screen share right over here.
Got to skip the
And there we
foreplay
go.
today.
There we go. I think I'm good to go. All right, cool. Yeah, so Bitcoin, I left you off last time. We talked about a lot of higher time frame ideas, things that are, not really on the verge of happening right now, but what I'm essentially looking for over the next year or so. It was kind of like a, more doomy-ish message, I suppose, but I really wanted to have like a more optimistic message. Anyways, we're going to be focusing on the more immediate stuff. I just do want to say, before really getting into it, I actually do believe in Bitcoin long term. I think you can actually get some of those crazier numbers that you hear, from perhaps a John McAfee. But as far as the lower time frames go over here,
The Mick Cafe.
yeah, 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 man, he's a very interesting guy. Don't know about his presidential campaign, but if Trump can do it, man, I think I could be okay with McAfee.
Well, you
Anyways,
can't beat the $1 coffee at McCafe.
yeah, yeah, man. Oh, he's having mixology on Twitter and all that good stuff, man. He's a character. Anyways, lower time frames right over here, daily. basically just playing out more of what we spoke about the last time that I was on. Very corrective move that we're doing down around here. I don't really see any reason to retract anything that I spoke about. Again, I am essentially looking for new lows as long as three things are essentially present. First things first, daily making lower highs and lower lows over the last year. I'm just going to go with the former trend for that. But if we could make a higher high, that would be a good start. Not necessarily going to get you finished. Second, and very important as well, and perhaps significantly more important, and something that I would actually make significant trades off of. I would take longs off this actually, is if we could open and close a weekly candlestick above this purple 200 exponential right over here around 4150. That's been governing the last highs of this more aggressive downtrend area. So as long as we're doing that, no real reason to really be considering this as anything of a low. Just again, a bearish consolidation. The third and final, I think that we covered this last time, was getting back above this 6,000 area right over here. I'd immediately be out of looking for shorts mode. Of course, you're probably going to know beforehand. It's there's going to be things present beforehand, but that's like the no questions asked right there. But if we're focusing on and filling in the spaces from the last time that I spoke, we have lower highs. I think that we spoke right over here, something like here or here, and we just put in another lower high right over here, and now we're just grinding this area. Lower time frames is pretty simple right now. A lot of hunts going around. 35.20 to the downside, 35.80 to the upside right over here. But anything not breaking this range either which way has not done anything different. Now, if it breaks to the downside, obviously, whoops, let's go back to this chart. If it breaks to the downside, then yeah, I do believe that we're likely to just be more on our way towards this prior low. Again, while I am overall bearish, I think it's going to take a long time, and while I do believe new lows are extremely likely to happen, it's probably going to, I think that it can definitely play ping pong off this lower support and that low 4,000 resistance that seems to keep on stopping this baby all the way down. Um, so until anything changes there, it's just more the same. But you're going to see a lot of people get really bearish if this thing actually does break down back to the prior lows. But we did put in a nice charting formation right over here. Symmetrical triangle does have the right volume characteristics, does have the right size, shape, smell, all that good stuff. And triangles, in my experience, especially with cryptocurrencies, they play out pretty well. Most charting formations do not in cryptocurrencies. I think the reasoning for that is because they're quite easy to be painted, especially in the altcoins, but also as well. So guys with higher the market movers with significant account balances, they can actually paint this stuff in here. And when everyone's kind of looking at the same thing, like people are calling this an inverted head and shoulders when we hadn't had this rejection right over here. Well, that's pretty damn big signal. I mean, we were speaking about it on my channel. That was not what was going on. But again, looking at the overall shape and structure, very corrective. If we just extend this guy right over here and put him down right over here, well, if we do start filling out this area, what are we going to essentially be making? Nice ascending triangle. You probably remember that from the 6,000 level right over here. They are great at getting everyone on the wrong side at the wrong time, which is beautiful for generating liquidity for the bigger accounts. I think it's something like this right over here. We do have an apex on this guy coming down around what is this, like, yeah, middle of April. So it will be forced to choose a direction before then. Typically choose a direction when you're about 59 or 69% full, and then just increases the chances the more and more full that it gets. So, as long as we're in this range, it's just going to be a case of buy support and sell resistance. Again, everyone gets really, really bullish around this area right over here. Everyone gets super bearish around this area right over here. But the right way to be doing this is waiting for a confirmed break. So how do we get rid of the noise? How do we not be a part of a part of the people who are being the liquidity? Well, again, going back on over to our Bitstamp chart. And really, it's just as simple as this. You got your 200 simple to the downside. As long as that's holding, don't want to be too damn bearish. Looking for new lows, although I strongly believe new lows are likely to happen. As long as you're as long as you're below this purple 200 exponential right over here, don't want to be too damn bullish. Actually, no reason to be bullish as long as you're below there. Just more lower highs, and overall, it's pretty bad what we're doing right over here. Again, we went into more long-term analysis last time I was here. I don't know if you want to do that again this time.
Yeah,
Takes a look.
obviously, let's do a brief recursal. I mean, I think that what you've laid out is a phenomenally useful set of facts, set of guidelines if you're actively trading. I happen to be under the belief, and I would almost bet my pinky that most people in the crypto space are not as active on the day trading front because it's just it's
Mhm.
its own life. But yeah, so
Yeah,
let's
you
talk a
don't want
little
this
bit.
life.
you don't want this life.
Do you wanna watch pixels on your screen 24 hours a day? Probably not.
Take the red pill or whichever one makes you wake up at home. Yeah, so that's all very interesting. Obviously, when you look at it from a point of these moving averages and seeing how they're really just pretty much playing within those, and as soon as they break one, like when they broke that aqua moving average, it you see the plummet, and then you see the bounce off of the red moving average all the way out, and now it's just sort of making its home in between the red and purple moving averages right there on the screen. How long of a time frame does it look like this is going to play out on? I mean, if you were to zoom out a bit and do a little bit more long-term analysis,
Okay,
obviously
yeah, let's talk a little bit more long term.
news
So
events aside, I think nobody should be
yeah, yeah.
waiting on news events. Let's imagine that news doesn't exist. There is no news. What does this look like?
Okay, cool. Yeah. So, this portion right over here, we just laid the groundwork for what's going on now. That whole scenario that we just talked about, filling out that space between the 200 simple and 200 exponential, assuming that it does break to the bear side, which I would say is extremely high probability. This could take another couple months. Now, we did do a little bit of time analysis last time I was here. This is not something that I put that much weight on, but it is fun to look at. I'll bring you back over to the BLX index. This is the longest running basically documentation for all exchanges, all trading history for Bitcoin. You do see that volume wise, it's not necessarily the most accurate, but as far as price action goes, pretty damn good. So we'll be running with that assumption. And I've essentially created, again, I want to talk with the caveat. This is not this is not something that I really trade off myself. This is more analysis stuff rather than trading, which I do really want to separate the two. Analysis and traders, not the same thing. Anyways, each and every one of these dotted trend lines is a support trend line of a parabolic market cycle in Bitcoin's history. You have this first one right over here, 2010, 2011. That gets broken in 2012, and that becomes the highs of your 2013, 2014 market cycle right over here.
Hmm.
Then we create another support trend line for that next parabolic market cycle right here, gets broken in the 2014, 2015 market cycle right over here. That becomes the highs of our 2018 market cycle right over here. Then for this past market cycle, we created a support trend line for this guy right here. And that was broken in 2018 on that down that basically took us below the 200 exponential, this purple line, right, that purple moving average right over there. Now, does that become our governing principle going on in onwards and forwards? Perhaps. And that's one of the reasons why I am a believer in Bitcoin. um, as this it does rise pretty rapidly. Now at the end of this year, 2019, it's actually not even above 13 or 14,000. Yeah, it's about 13,500. If you do just go out a couple more years to like 2022, somewhere right over here, where was it? It could potentially be 93, 94,000. Now again, do I put that much weight on this? Technically speaking, you need 3 times to make a trend, and we have two prior parabolic market cycles. But if I do make the assumption that it is, and I do actually draw out what I believe would be the next support trend line of the potential market cycle that we are resolving right now, we put in a low somewhere where I believe is likely, which we should actually look at right over here. Again, this is making the assumption that our current low, the current 200 simple moving average right over here, breaks 3250. Close a higher level below there, and that's exactly what I'm looking for. Then I'd be looking somewhere down around here, first and foremost, around 2300 to 2600. That's this blue box, which where the 886 Fibonacci retracement is. That is actually where Bitcoin did bottom out in 2014, the 886 fib. Um, and we do have some nice high value nodes coming in right around here if you're familiar with the volume profile. Also some nice historical horizontal trend lines, and if you're familiar with traditional markets, you know that the 377 exponential moving average is like the ancient technology is what I like to refer to it as. You don't see it too much in crypto because it's too new. You need 377 ticks just to put on one tick on this guy, or 377 weeks more like. But that guy is coming in right around 2600. This usually is the saving grace on on a major bear cycle. Now, does that mean that it's guaranteed to be the low? No, not at all, not at all. But there are other things that I'm looking towards. Anyways, if we did make the assumption that that was a low, well, we could say that it's probably going to be somewhere around this middle of February area. But remember, that's not guaranteed to be the low. There's a few areas that I have marked out. I have 2300 to 2600, then 1850, and then this guy down around here, around 1100 to 1300. Now, each and every one of these guys is a potential bottoming area, and the only way that you're going to know, and people are probably not going to like this, but it's the true, it's the right way to do it. You don't know until you actually get it. And what do I mean by that? We need to see the reaction. Now we've seen the reaction on our current bounce. That is like textbook corrective price action. So we can make the strong assumption that it's not going to be the low. Doesn't mean that you can't have rallies off it. Doesn't mean that you can't have nice green days here and there. Absolutely. In fact, you did have a $1,000 rally from the current low, or even more than $1,000 rally from the current low to the current high of the bounce. But again, when looking at the higher time frames right over here, can we come up with any sort of a method to this man when I trying to tie this all together? Well, I know I'm a little bit jumping around right here, but basically I want to bring it back and bring it around to this area, back on over here to the BLX index. And you'll notice that I have two declining trend lines right here and right here. Now, these are actually related to each other from different market cycles. And again, the reason why this is even relevant, the reason why I even pay attention to this, because market cycles overall have a lot of similarity, a lot of brotherly characteristics between each other. What do I mean by that? Well, basically, because all trading is essentially governed by humans in some way, even if it's bot or algorithm, they're programmed by humans, right? So there are a lot of brotherly characteristics between the way that everything plays out as market cycles. And I've noticed this not only in Magic and Net Money, but also commodities, Forex, and where I come from as an equity options market maker, in traditional stocks, essentially US equities. Now, the way that that specific asset plays out its market cycle has its own personality, but it follows the same general principles. Anyways, we have an example of how Bitcoin plays out its parabolic market cycles, going off from the past right over here. And you can see that when it puts in this high right over here, and I actually made this on a daily, but just take my word for it right now. Well, we can actually just go to it. Why not, man? Just fucking verify it. Anyways, we do have this guy right over here, going from the top. And basically, I have this first descending trend line, which does hold in that first consolidation before the bull trap of 2014. Now, we can make the same line over here of that first parabolic top and then that first consolidation before the bull trap of 2018. You actually notice that you even do have the same setup on your exponentials and simples. You have the 200 simple, the red and the purple coming in right around there on your bull trap and right around here. You can just barely see it, but again, it's trying to make the best of it right now. Anyways, why is this relevant? Well, in 2014, the first trend line, this first ascending trend line, that is the one that once it broke out of and gave you the bull trap, it did pop back down and test it once and test it twice. And that's where you put in your ultimate low on the 886. Remember when we spoke about it as a potential bottoming area for this next parabolic cycle? Well, if we were to follow this guy down, and we already have bounced off of it once, that's actually what's holding up this current or providing the impetus for this current bounce. We could actually come up with a potential timing component of this. So when you are talking about timing, we have to first accept that this is not black and white, but also by the same token, if we can think in gray areas, then essentially, if we do go off of the assumption that it's likely going to be one of the three areas that we talked about on this chart over here, that's already in here, then we can just kind of find that on the timeline and see where that does indeed line up. Now, going back on over here, we do have this area right around the 2300 to 2600. That would likely be, again, middle of February. That's literally less than a month away. I think that that's a little bit more optimistic. I While it's possible, my opinion would say, I don't know about that just yet. Uh, and then we got this guy right around here. Sorry, the 1800-ish area right around here, which I actually think, if you're asking my personal opinion, I think it'd be somewhere around there, like low 2000s to high 1000s makes sense. Not too many people are talking about it. And overall, when you're talking about major lows for a market cycle being put in, it's not because your technical analysis had like the secret sauce or anything like that. This is more crystal ball type thing. And when people portray that, it's very misleading and it shows that they are likely an analyst and not a trader. Because again, what actually happens on a big market cycle low is someone with extremely deep pockets, I'm talking, half a billion, billion plus, whatever it might be, managing that, that kind of size, They come into the market and their priority, their perspective is to buy as much as possible while people are literally losing hope. So they're not going to do it. They're not going to like buy it on like the most obvious area because that's, they're going to be competing with other people. They don't want to compete. They want to get as much as possible because they're long-term thinkers. They're not thinking, like a day trader. They're definitely not thinking like a day trader. They're not even thinking in a year. They're thinking like, multiple years out. And these are professionals. So anywhere around there, could potentially come up with it, but I always want to get that out there as well. Don't when people start talking in absolutes, that's a really, really big red flag, extremely big red flag. So looking at this right over here, yeah, if it was the 1800 level down around this area, that would be like early to mid-April. And if it did get all the way down to, God forbid, 1300, 1100, which it is certainly possible. It's certainly in the cards. Don't get me wrong. That is the 942 Fibonacci retracement. That is the prior high of your former mark cycle, which is like an unspoken rule that becomes the highs of your the highs of your four market cycle become the lows of your next market cycle. Well, if it were to come all the way down around there, that would likely be in middle of June, it looks like. So again, we're making a lot of assumptions here to be very, 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 very clear, but we can also look at a potential area for when does this thing break out of accumulation. Now you can see.
So let me just break this up for 1 second, and I do enjoy the hypnotic rhythm of your voice. Let me just recap a little bit for anyone who might have gotten lost in what is a swirl of
Yeah, please
predictions
do,
and
please do.
information. So we have two market cycles. They resemble each other in a variety of ways. And then we have the magic dotted line crystal ball predictions, which are
Yeah.
essentially projections based on the angles and the trajectories of last market cycles. Those are sort of overall governing factors. And really what I'm seeing here is that if we were to break below that sort of 1650 range, it would actually symbolize that we would have broken your magic dotted crystal ball lows, right? That would be out of the range. If we
Now, yeah, well, see, this last support trend line, this is a guess on my part because what I'm doing, remember, each and every one of these dotted trend lines on the bottom is a support trend line for a parabolic market cycle. I can say with certainty the ones beforehand
Yep.
because those are lined up with major pivotal points on the market. That is pretty cut and dry. But this one over here, I'm not sure yet because we really need to see a potential low first. So
Gotcha.
that one's more speculative than anything, to be very, very fair. And I'm glad that you're calling me out on this because it needs to be done. And I do want to be very clear and honest and open with the parts that are much more speculative than actual technical analysis.
So what we do know is that we have what looks like a governing high of the next market cycle. Just in case anyone
Yeah,
wants to go
that I'd be looking
rehash
forward
this
to on this.
video in 3 years, we can make sure to bookmark this video because in 3 years this will be how you determine the high of the next market cycle. But yeah, essentially what we're looking at, and essentially just to recap here, the high
Mhm.
1,000, low 2,000 range for Bitcoin puts you in a range to bounce off of this governing low while still not being the most quote unquote obvious range, which means
Right.
that in a sort of counterintuitive way, it's more likely to happen because that's where investors are going to find less competition, and the big investors are really going to be able to sort of get that capitulation without the competition. Capitulation without competition, I think, is what you're saying, is a magic. It's a
Yeah.
magic formula for the real big whales coming in and providing that price support. And so
Right.
I personally am going to start nibbling as soon as, if in the God forbidding case that we break below 3,000 on Bitcoin, I'm going to start nibbling in a long-term investment standpoint. But what I'm sort of feeling is that as we approach those low 2000s, that might be a point where we're looking at actual true bottoming out potential, and a point where it might make sense to take out that second mortgage. And I'm just kidding. I'm just kidding. Not financial advice. Um,
Not financial
not
advice.
financial
Very
advice. But yeah, that's where it starts to get really juicy, and that's when you could start imagining the whales coming in, and you're now swimming with the whales. Is obviously the goal in all
right.
markets at all times.
Right. So I want to separate myself from the people who are dogmatically reliant on technical analysis during those sort of critical areas because you can't be. There's no way to actually do that until you see the reaction. And the problem with it is everyone thinks that they're going to be Mr. Genius buying the bottom. Not everyone think, but the questions that I typically get are, "Hey man, what are you going to do during capitulation?" I'll tell you straight up, man. I'm going to do nothing. I'm going to wait because first things first. when capitulation is actually bought up, it's going to move so fast that you won't really have a reaction. You won't really have a chance to react. I mean, to give you an idea of what capitulation looks like, I mean, everyone here has actually seen it. Everyone's actually seen it, at least has one example going back from the low of this 6,000 down right over here. Now, I'm assuming that people were in this market around February, but basically Bitcoin went from 20,000 to 6,000 and more like 12,000 to 6,000 in this area right over here, extremely aggressively, down about 50%, 60% in the span of, less than a week, I feel like it was. Now, during this low right over here, you have a bounce up. You literally have a bounce up in about 2 hours. Each and every one of these is 2 hours, 10%. By the end of the day, you had a bounce up about around 30%. By the end of the week, you had a bounce of like 50 to 60%, something like that. And within 2 weeks, you bounced up literally 100% over here to about 12, from 6,000 to 12,000. Now, you know that this is a an example of capitulation because we can bring up the MVT signal. And I do want to follow up on this from last time that we spoke, because last time that we spoke, it was actually a little bit hairy on if the MVT signal was still relevant or not. And it is this one over here, and there's a few things to be aware of it on, but this one right over here does provide some insight into the inner workings of what's going on from
And
a
for
different perspective.
for a little bit more
Mhm.
substantiation to substantiate. Okay,
Yeah.
to back that up, there's a I actually spoke yesterday, and I will be editing, maybe putting them out in inverse order. But I spoke with the Bloomberg analyst who I originally interviewed back in late November,
Right.
who's been calling for a $1,500 Bitcoin since literally November of 17, and he heavily relies on NVT. And so, yeah, take it away.
Yeah. Yeah, so this is a very interesting thing, and this indicator on TradingView that I just showed you, this is verified by the maker himself, Willy Woo, that accounts for the new upgrades in Bitcoin. That meaning Liquid and Lightning, because there was some discrepancy with that, but it looks like everything's been sorted out right over here. This thing calls major tops and major bottoms like it's its job, because that's quite literally what it was designed for. But the more important thing is, and why I'm very interested in this, is because it's an external thing to all the technical analysis tools that we just looked at. What is the MBC signal? It was the network value divided by the daily transaction value. The network value divided by the daily transaction value, if I got that out properly, and then it's interpolated using a forward back smooth 90-day smooth average, I think it is. So again, people also get this wrong because they try to use it on like a weekly and they think that we're flashing a signal right now. No, you can't use it on a weekly. You can only use it on a daily because of the way that it's actually made. But you can see over here we did flash some green on this 6,000 low. Now, of course, was that the ultimate low of the market cycle? No, it was not. I mean, rhetorical question, obviously. But my point is that it calls the big highs and the big lows pretty damn well. And you could even argue that the reason why this was not the lows, this was like a bubble in and of itself at that 6,000 level. So when Bitcoin bounces, really what we saw of about 50% almost 50% in a day, and then 100% over 2 weeks, that is the way that Bitcoin seems to play out its parabolic market cycles and parabolic or diabolic, I guess, downtrends into capitulation. You have the same thing right over here in 2014. In fact, um, you have a very similar signature where you come all the way down and then you bounce up literally 100% in the span of a couple weeks. Whoops, if we go on over here, yeah, something like that. If you go wick to wick, you can't see it too well right here. But again, you flash green down around here, you flash red on your bull trap, just like we did in 2018. And again, this one has a damn good history. It got the highs in the 2013 high right over there. Although again, not an actual mark cycle in and of itself. It's just a part of the greater one over here, and it even told you the low right over here. But more importantly, we are not flashing any sort of buy signal in this area right over here. And you know what? I'm going to do something that I did not show last time, but I think that you guys might be interested in, especially with keeping in context that this crowd is a little bit more like long-term focused, which is definitely something that I'm interested in myself. And essentially, this area right over here is extremely similar to this area right over here in the way that I look at things. Why do I say that? Well, essentially, the volume signature between this area and your parabolic high right over here, your parabolic cycle right over here, is very similar to the volume signature right over here, and your parabolic cycle right over here. Just as an aside, if Bitcoin does get the more aggressive, violent wave capitulation that most people are familiar with, that you got in 2014, I want to see volume similar over here to what you did over here in your parabolic cycle. Anyways, doesn't need to be like that, by the way. You can get capitulation multiple ways. It's about the emotional feeling. Again, going back to human psychology, it's about emotional feeling more than anything of desperation and just like loss of hope. That's what causes capitulation. It's
Y-
forced financially.
You know what?
Uh,
You know what would coincide almost what seems like almost too perfectly with that. Maybe it's too
yeah,
soon. Maybe it's too soon. But a
go
denial on
ahead.
maybe a denial on a final denial on the Solid X and VanEck ETF in late February might trigger a bit of a frenzy because that seems to be some kind of burning like I almost said Hanukkah candle, but like a burn I'm Jewish, guys. I can say it. Like a burning candle, like the last little bit of like a flicker of hope for the community is this idea that the ETF is going to put on its big red cape and save us. Obviously, we didn't have any ETFs in the past market cycles to save us, but here we came right back. And so I believe that it's totally possible without the ETF. Obviously, maybe it takes a little longer, but
Yeah, you have the
what
ETF.
what is late February? What is late February? Would a capitulation move in late February line up with any of this?
Well, actually, remember when we went back on over here to the BLX index, this that 23 to 2600 area right over here would actually directly line up with middle to late February.
21st is
The
when we're supposed to be due a decision.
Yeah, the 21st. This is the week of the 25th. These are weeklies, so I can't
Yeah.
really like get in the middle, but
Yep.
yeah, in that area is actually where I'd be suggesting, funnily enough. And that this area really is quite a potential area. Not too many people are talking about mid 2000s. People are talking about they're either talking about as we bottomed right now or Bitcoin's going to like 1000, which again, I think is very deceiving. When you can see that there are obvious areas of potential interest beforehand, I just don't see how you can see that, no matter what your secret sauce is. Anyways, back on to
Moon
what we were
Moon
just
or
speaking on.
Moon or Doom is always clicky and
Yeah,
important, but what I love about
right.
your analysis is that you do your damnedest to present the points of interest on a daily, weekly, monthly, like depending on what time frame and how far you're looking, there are points of interest all along the way. So
Yeah, absolutely, man, and I appreciate that. And Moon and Doom. It gets the views on YouTube. That's awesome for like creating content, but what really is most of this game, it's somewhere in the middle, just like with anything. Anyways, back onto this area, and something that I didn't talk about before. I keep on getting sidetracked by my own thoughts, but this area right over here, very similar to this area right over here. Not just the volume of this guy in relation to your parabolic cycle right over here, and this guy in relation to the parabolic cycle right over here, but also when we look at the percentage drawdown coming into this area off of this. Actually, let's really zoom in on this. Off of this descending triangle right over here, which is what we did have at that 6,000 level. Well, if you draw or if you take a little bit of a percentage drawdown, that's what about 54% drawdown. If we go over here and we look at this descending triangle as well over here, take that same sort of thing. How much is it right over there? Around 52%. Again, within the realm, close enough is close enough to me. And then also the bounce off this area, which I'm going to use bodies rather than wicks because to me that is more accurate. You got about a 25 to 26% bounce, and going off of this guy right over here, and even
about
I mean, even if you
30%.
do go up of Wix, yeah, about 22 to 23 or 25% as well. In fact, if I would have done Wix on the other one, it would have been the same. So, the bounce and what got us in there is pretty damn similar. But also remember the MBT signal, completely divorced from any of the other indicators that we look at, just its own thing essentially. If I bring this guy up and I go again, it can only be used on the daily, really. If I go back on over to the daily and to that initial area, let's just see what the MBT signal was flashing around this area. We'll zoom in right over here. It's this area right over here. So just line it up. And what is this guy right over here? It's around the 90 area. So it not bottomed out just yet. Well, let's just mark this area off. I'm gonna put a nice horizontal in there, and let's scroll on over to the immediate time frames. And where are we at in 2018 or sorry 2019? Right here, right around the 90. So again, it is very, very interesting to me that we are flashing something like this, which is related to again the network value divided by the daily transaction value
Yeah, it's
in
pretty
these complete.
it's
Right.
it's pretty amazing the accuracy. I mean, I you can't obviously forward test things, but you can back test them. And when you have an indicator that has what 100% accuracy on finding the tops and the bottoms, uh,
Yeah, it's pretty damn good.
I'd take 100% accuracy. I could accept that. I don't think you
Yeah,
get. I think the problem is that you don't get anything that's 100% accurate in crypto, and then all of a sudden
right,
you do.
right.
And so, if you look at it, it's staggeringly obvious that the NVT is flashing red at the tops of the prior market cycle of the 2017, early 18 market cycle, and it's stagger even in January, February when we had our second
Mhm.
dip. It seems like it's really flashing. So, that's it's pretty amazing. So, I mean, for what it's worth, keep that in your back pocket, a feather in your cap. If you're looking for bottoms or tops, it's been incredibly accurate. I mean, just very incredibly accurate. How quickly does the MBT react? Is it a lagging indicator, or can you sort of get a good pulse on it? How quickly can you?
It will flash, on the day of. So you see it right over here. This is the stab down to 6,000.
Yeah.
This guy right over here actually did flash you a signal, and then the next day was the low. And just to go off of what you're saying, I do want to make it abundantly clear that this does not call the market cycle top and bottom. It calls major tops and major bottoms, major inflection points pretty damn well. So again, this was, I just don't want someone to see this and say, hey, 6,000 wasn't the bottom. What are you talking about? This is bullshit. Well, no,
Well,
it's
yeah, I
it's
mean,
not like
anyone
that.
would have been happy to sell
Right.
at 16 or 20, or then again when it called six. Like, it's when it calls the tops. That's a good idea that maybe you won't get that kind of price for at least a significant amount of time. And if all you
It's a
care to
damn good place to take a trade. I'll put it that way.
yeah, if all you care to do is tether and then untether back when you hit a bottom, then you'll probably be in for a significant increase in your hodlings.
Yeah. Yeah, so I think we probably covered most of what I was talking about on that area. Just overall, from moving average perspective, which is what I put the most weight on myself. I guess we could just stay here for a second. This is everything that you look at to denote a bear market as far as moving averages go. You have all lower period moving averages below like the next higher one essentially, and with the 10 simple right now governing price action to just even put salt, to just rub salt in those wounds. So Bitcoin is looking pretty weak around here. Of course, you might see, you could very easily get a rally back up to 4,000. Tag that, put in another lower high. Even if you do break above that 4,000 area, it ain't all said and done, right? It ain't all said and done because you do have quite a bit to work through on your way up. And again, that's why I look for an open and close above the 200 exponential on the weekly. But just to kind of knock a few out, just to make sure, just be careful if you do see a move to the upside. These can get sold into pretty damn easily, and you will have your traps in your bear market. I mean, just going back to that same area that we were looking at. Just I know that's it's getting a little bit dragging on, but I will end. I will end it here. Um, this area right over here, you did have a pretty damn nasty trap. I mean, basically double bottomed and then put in a slightly higher high, even on a weekly, and then rolled over to your ultimate low of that market cycle. So again, if we were to get some sort of a break out of this area and maybe tag somewhere around this, it's just be careful. That's all I'm saying.
So to
It's there
reaffirm
was
one of the things you've been very strong on, $6,000. That is a significant area, and that after you can,
Oh, 100%.
if we
Yeah,
break
so
that,
from a
you can
technical analysis
feel
standpoint,
yeah.
yeah, exactly. So if you're just going straight off of technicals, that is a prior phase of your market cycle. So to get back above that area, the breakdown trend line, right around here, the 6,000 area, that would be significant. It would say that we are ready to do something new and different. However, as you can see over here, with the way that all of the moving averages are starting to migrate below that area, that just puts more and more pressure on price action. So price action has a lot to chew through back on the way up. I have a feeling that a lot of I see a lot of people on like crypto Twitter and crypto YouTube and Reddit and all those great social media places. Awesome people, no doubt about that. But they draw these charts that are just like a V bottom out of here. It's very unlikely to happen. What's more likely to happen is Bitcoin will get some sort of a sideways action like this. That is also why I'm not in any sort of a hurry during an actual capitulation event to get in, because opportunity cost wise, you don't really want to have dead money in a sideways asset that could be going that way for, who knows, a year, 2 years, whatever it takes. We don't know. And again,
It's
remember,
is this market cycle looking longer or shorter than 2014,
oh,
15?
it's definitely longer already. It's longer already. If you're just making a relation off of the break from 6,000 and the break off of this guy right over here, leading into your more aggressive downtrend. If we do put on,
But
we can actually measure
by
it out.
what order of magnitude do you feel like it's longer? 1.5, 2x, 3x, 100x? 1000x.
100x baby, all in. So if we took it down to like about the same area that we're currently operating off of, at least what I think, according to the MBT signal, according to our Fibonacci's, according to volume profile and historical areas, well, this from this top to this bottom right over here, about 322 days. If we did the same thing for what for what we're looking at right over here, it's about 406 days already. So we're already
About
much
20%,
longer.
30%
Yeah,
longer.
yeah, a little bit longer, yeah. So
All
again,
right.
no real rush to get
S-
into anything.
Better
These things take time.
stock up for the winter, y'all.
Yeah,
Um,
yeah, man. Don't
winter
want to be the bearer of bad news, but
winter
it's
is coming, season 8. Okay. Okay, so I this has been great. I think we have really teed the A and A'd the T. Let's move on. I want to do a little
awesome.
bit more of a segment which I
Okay,
didn't intro in our conversation, but I will make a quick intro to for the audience before this video. Let's talk about market making. I want to do in our segments, and by the way, Krown will be back
okay,
on a regular basis. Thank you so much for making yourself available to the FUD TV audience. I really appreciate it, and I hope you guys appreciate it too. I want to
absolutely,
cover
man.
individual
We appreciate
topics that are more, less about daily TA and more about generic, not generic, but general higher level concepts about trading and understanding markets. And the first one that I want to dive into today is what is market making? You are a
that. Okay.
former market maker. What does it mean to be a market maker? What are the activities involved? How does it work? How does it affect the market itself? Who are these people that market make? Dive. Let's just
Who are
let's
these damn lizards?
who are these makers of markets? What does it mean to be a market maker in traditional markets, and then what does it mean to be a market maker, and how does that work
Mhm.
in cryptocurrency?
Okay, so to lay out this conversation, first I need to describe exactly what I did in traditional markets. I was an equity options market maker authorized trader with a Series 56. What does that mean? Well, I was basically making marks in just options, the derivative products that you see, calls and puts essentially, if you're familiar with those. Now, in traditional markets, a market maker, whether it's for your underlying spot, whether it's for futures, whether it's for options, whatever it might be, what they are doing is they are essentially quite literally offering you, the retailer, a market. They are quoting the calls and puts. In my case, if it's spot, they're going to be quoting like a bid and an ask for, I guess, spot. I guess it's the only thing to do. But as far as options go, I would have an algorithm and essentially a model, I guess you could say, of what I believe the market was, given based off of several different inputs, and then I'd update it as the market fed in more and more information, and that would give me an idea of what these options were intrinsically worth. So I would have a theoretical value based off of this model, and then I'd say, okay, if my model says that these, Jan 15 calls are at the 90 strike are worth like $5, whatever, just complete random situation, are worth $5 theoretically according to this. Well, then I'm cool with putting out an offer there for $5.50, and then I'll bid them for $4.50. So you, the retailer, can come in and say, all right, this looks good to me. I'll buy this from this nice man off of Arca for $5.50. And then I know that as a market maker, as an options market maker, I can take that and then I can essentially do for most people pull in the reverse conversion market. So it's an option strategy where I'll essentially be, in that case, if I'm selling them a call, I'm going to be also buying a put and then selling stock against it. And my whole MO essentially is to lock in all sides of the trade at the point of entry, essentially based off of that theoretical model. So if I know that I have, even 50 cents of edge in that scenario, then I can essentially lock in an immediate profit.
Hmm.
When people are market making in Bitcoin land, whether it's BitMEX, whether it's Binance, whether it's Finex, whatever it might be, whether it's or if it's spot, traditional markets, whatever it is, what they're doing is what they're doing is called stat arb, which is a scary word that really just means they're trying to buy low and sell high immediately. If they can see that on exchange A, it's you can buy a Bitcoin for $1,000, and on exchange B, you can sell it for $2,000. Well, I'll do that every time. Now, of course, this is a drastically simplistic model. Really, the edges that they're working off of is like a few, maybe like a few pennies or whatever it is. But and even then, I'm really simplifying what they're doing because I do have a friend who actually owns a firm, sorry, not owns a firm, but is like co-founder of a firm essentially in Chicago. And they actually do stat arb on Bitcoin. They do stat arb on Bitcoin and also traditional markets as well. But his focus himself is mainly on cryptocurrencies. And what they're doing is very, very devious in the sense that they will create their own algos to battle other algos for market making to put in orders into the order book and essentially like drag someone else into putting something else up, then they can get their fills and work around on a different exchange,
It's
whatever it might be.
it's the drone war.
Again, yeah, yeah, exactly, man, exactly. So
It's
it really is Terminator out there,
drones
but
fighting drones.
here's so here's what I do want to get out. When it comes to market makers, a lot of people erroneously make the claim that, it's the evil market makers who, are manipulating this, which is so far from the truth. Market makers do not give two fucks about direction. They only care about walking things in at the point of really of sale or buy from whatever product that they're working off of. So as far as market makers are concerned, they just want trading to happen. They don't care on what direction. Now, of course, if there are certainly market movers, is what I refer to them as, just people with extremely deep pockets who might do what some people refer to as manipulation. However, again, manipulation it invokes the wrong idea because it has a negative connotation. Like it's almost as if you're looking at a different screen than another person. No, that's not it. But they can, when they want to paint something on the charts, they can do that, especially in cryptocurrency and where it doesn't take all that much money in comparison to traditional markets where they can actually do some damage. They can certainly do some damage there. Some major hedge funds can really wipe out some books, no problem. Um,
But to move the price
but in Bitcoin,
of Apple, it's going to take a lot more than to move the price
oh
of
yeah, yeah,
Bitcoin. Yeah.
that's going to be I mean, you'd have to be someone just phenomenally big. But in Bitcoin land, especially when you have these exchanges that have 100x, you don't have to put all that much to force things around essentially.
Mhm.
So those guys can do it easier. Is that manipulation? Technically it is, but then by definition we're all market manipulators anytime that we have a position essentially or put in an order in an order book. It's just some people are bigger than others.
So to
um
recap,
so yeah.
market making is creating facilitating the buying and selling, making sure that there's liquidity on both sides, and establishing the
Mhm.
spreads between the bid and the ask
Exactly.
at its core
Right.
level. And the market maker is indifferent because what they want is activity. So they don't care whether that
Exactly.
activity is plus or minus. They're happy because they're both buying and selling. They're on both sides
Mhm.
of the equation, and they're establishing essentially the playground that other people play within. They are the sandbox.
Right, exactly, exactly. And so, I'm coming from the perspective as an options market maker, but the general idea is the same. Now, I would be playing the reversal conversion market. Stat arb is, the idea is the same. They just want to lock in things because they know that if I buy over here and then I sell over there, I make a few pennies. And if I can do that thousands and thousands of times, even better. And that's a little bit more of an issue in traditional markets, but I'm sure it's something in Bitcoin land as well. I know that my friend's firm does it, where they will essentially have their servers close to the servers of BitMEX, for example, so that they can get the fastest ping time. And there's a lot of games to be played with that, no doubt about that. But there's a difference between market making and like a quant firm. A quant firm is a little bit more devious, I suppose, in the way that people think that maybe a market maker is essentially a quant firm. The more sophisticated ones, they can map out where people stop. So I mean, they can do some pretty nasty damage, uh, which is all legal in this game. It's not. I mean, this is why you get these incredibly disgusting and violent hunts both ways, which we just experienced a couple
What
of
is it
a
defined
couple
for
of months ago.
the lay person what a hunt is?
Yeah, so a hunt is when you see Bitcoin, for example, have a move like like $100 move in the span of 5 seconds, and then come back to where it was 5 seconds ago. That is a hunt, and typically what it is a bigger account is trying to generate liquidity for themselves. They're trying to provide the illusion of a breakout or breakdown because remember that person who has likely a big brawl to play with, they can't just they can't just enter at market. You can't just market by 100 million, not I mean let alone like a 500 million or even 10 million. I mean, or it's you're gonna spook the market. So in order to generate liquidity for themselves, well, they will provide the illusion of a breakout, and then they just basically buy up or sell into whatever, whatever the retailers or traders or whoever it is, playing the other side is doing, and then they can, gobble up all the stops as well, and
Would
then
would you
everyone,
consider
all the retailers are mad.
would you consider it a bit insidious, this hunting? Or is it just
Uh,
or is it just the major leagues? This is just Major League Ball, and if you don't
it's
wanna play in the
so
major.
nasty in I'll tell you this, man. It is so nasty in Bitcoin because the lack of liquidity can really generate these just phenomenally violent moves. But it's all legal. It's all part of the game. If you're gonna play the game, there's I don't believe that there's any sense in complaining about something if you can't do anything about it. And if you're going to play the game, that's one of the risks that you accept, just like a risk of an exchange going down, or I don't know, like the Bitcoin developers messing up and Bitcoin no longer works, or whatever it is, man. We all accept that risk just by in some way being involved. Yeah. Again, I don't think that these things are likely to happen, but hey, when you really break it down, yeah, it certainly is. I mean, just ask the people from Mountain Gox, right?
Yeah, that's definitely a unique situation as well, Mount Gox. But I thank you so much for that. I hope that was clear, guys. Market makers are both, the fuel that allows for a market to exist in the first place. Without market makers, there's not
Mhm.
enough buying action. There's not enough selling action. The market cannot be facilitated. It doesn't happen. You can't buy when you want to buy and sell when you want to sell. However, the market makers are also essentially able to, I guess market movers is a better thing. The market movers are able to take those rules and bend them and even break them when
Mhm.
when it makes sense to them, and take advantage of that. In Bitcoin and cryptocurrency, we need market makers because there aren't these official bodies taking that role. So you have these sort of, I guess it's like an organic community. It's about how many people have the ability to market make. You need a huge
Right.
stack to market make, and if you're in the position to do so, it incentivizes you to do so. It's kind of like this organic thing, whereas I think market making is much more structured in the traditional world.
Well, in a weird way, I'll even take you one up on that, man. In a weird way, one of the reasons why you have these just phenomenally brutal, shakeout moves is because there's not that many market makers, really providing markets. Essentially, they're not doing they're not doing their job, man. In traditional markets, there are rules against this. Like I was forced, if I was on roll to essentially quote something, I had to force out quotes. Whether there was a quota on my quotes, essentially. Um, so there is that. And essentially, when it comes down to these market makers, they aren't even moving the markets by definition. What moves a market? Well, market orders, an imbalance of buying versus selling. What are market makers doing? They're just offering the bid and the ask. So when people actually do push a market, they are just forcing the market makers back. In fact, you probably everyone listening to this has at some point been actually a market maker themselves in a way. It's obviously not officially, but if you're putting in an order in the order book as a limit order and you don't get filled at market, well, you're a maker. And on some exchanges, you even get paid a fee to do it. So yeah, it's uh,
I
it's
always
it's one of those
I
things
always
where it's
suspected
not so
that.
black
I
and
always
white.
suspected I was a market maker secretly.
Yeah.
It's good.
He's
It's good.
reptile.
It's good to
Heard it here
have. It's
first.
it's good to be confirmed. You know. Well, yeah, I think that's amazing. Quite a bit to digest. We've definitely been running for quite some time, so I think it's a great place to wrap it up. Any final words of wisdom on as we're entering the final week here of January 2019 here in Cryptoland?
Hey, I just want to have a positive message. I want to wish everyone well here. I want to say, I am a believer in Bitcoin while things are, likely to spend some time in this area and perhaps even lower. If you really do believe in the technology, if you really do, if you really are in it for the long haul, then these are, take this as a learning time, right? Take this as a learning time because in traditional markets, you need to go through about 10, 20, 30 years for an actual market cycle. In Bitcoin, they give that to you in about 5 years. So it's quite generous. Of course, I want to say massive thank you to Elliot for having me on. Massive thank you to Fud Nation as well. Again, I want to say thank you for the support on that last video. That was really amazing. Really do appreciate that. And you have my eternal gratitude.
Thanks a lot. Of course, we look forward to having you back many more times. Krown, if you guys are not following Krown, check him out. I'll put a link in the description section. Phenomenal content on a daily basis. Thanks again for all the words of wisdom, and we look forward to the next one.
All right, guys, take care.
Well, I hope you guys enjoyed this episode with Krown from Krown's Crypto Cave. If you did, you know what to do. Smash up those likes. Leave us a comment in the comment section below. And of course, if you're not already subscribed to FUD TV, please hit that sub button and click that little bell notification. That way you're made aware whenever we put out new content. Trust me, you don't want to miss an episode. We've got all kinds of things in store for you. I hope you guys enjoyed today's episode. I'm Elio Trades. You're watching FUD TV, and I will see you very, very soon on the next episode.